Dogecoin resistance is no longer just a technical line on a chart. It's the pivot point deciding whether Doge's long slump is truly ending or merely pausing before another drop. After months of grinding lower, Dogecoin's market cap has broken above a key downtrend and is now pressing into the 200-week moving average, a level that has acted as a ceiling for much of the past 2 years. This isn't just price action. It's a structural shift playing out in real time, and the outcome hinges on whether this Dogecoin resistance can finally be overcome. The latest data shows Doge's market cap sitting near $17.79 billion, according to analysis shared by Surf on X. That number marks a critical juncture. It's not just where buyers and sellers are meeting now, it's where the 200-week moving average, or 200 WMA, currently sits. This long-term indicator smooths out volatility and often acts as a magnet for mean reversion. For Dogecoin, reclaiming this level would be psychologically and technically significant. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The weekly chart reveals a rounded bottom structure forming after the sharp declines from the 2024 and 2025 highs. Rounded bottoms are classic reversal patterns, suggesting selling pressure has gradually dissipated and accumulation may be underway. But patterns don't trade themselves. Confirmation only comes with a clean move above resistance. That's where the Dogecoin resistance test comes into focus. The recent breakout above a descending trendline was the first step. It showed that the immediate downward pressure had been broken, but the bigger challenge lies ahead, turning the 200 WMA from resistance into support. If Doge's market cap clears this zone, the path opens toward $21.5 billion, then potentially $25.5 billion and beyond. These aren't arbitrary targets, they're levels where previous resistance stood and where new buying interest could emerge. A sustained move above would strengthen the case for a Dogecoin trend reversal and could attract more capital into the ecosystem. But here's the catch. The same technical structure that gives hope also carries risk. The Dogecoin resistance level isn't a one-time gate, it's a dynamic zone that adjusts weekly. And if the market cap fails to hold above it, the downside could retest the $15.5 billion to $13 billion range, where buyers previously stepped in. Adding weight to the current setup is the Doge-copper ratio. On the surface, comparing a cryptocurrency to an industrial metal might seem odd, but ratio analysis is a powerful tool for measuring relative strength. The Doge-copper ratio has now broken above its own downtrend line, trading near 0.01808 after bouncing from a key support zone at 0.016. This suggests Doge is regaining strength not just in isolation, but against a real-world asset with industrial demand. The breakout is still early, and the ratio remains far below its 2024 and 2025 peaks, but the shift in structure is meaningful. Surf described the move as a clean wave, indicating a potential change in momentum. The lower indicator on the Doge-copper chart also confirms the downtrend break, reinforcing the idea that selling pressure may be easing. If the ratio holds above the broken trendline, the next target is 0.021. Clearing that level would strengthen the case for stronger relative performance. Beyond that, 0.027 and 0.035 come into view, levels that would signal a full re-rating of Doge's market position. But again, failure below 0.016 would invalidate the setup and suggest the recovery attempt has stalled. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The important part isn't just that Dogecoin is testing resistance, it's what that resistance represents. The 200 WMA isn't a random number. It's a reflection of long-term investor behavior, institutional positioning, and market psychology. Breaking it would shift expectations. It would signal that the market is pricing in a future where Doge is no longer in a bear market, but in a confirmed recovery phase. That kind of shift can attract new flows, especially from traders and funds that use technical levels as entry triggers. Yet uncertainty remains. A test is not a break, and a break is not confirmation. The Dogecoin level must be respected not just once, but consistently. The next few weeks will be decisive. Traders will watch whether volume supports the move, whether the market cap stabilizes above the 200 WMA, and whether the Doge-copper ratio builds momentum. These are the signals that separate noise from narrative. In the end, the question isn't just about price, it's about structure. The Dogecoin at the 200 WMA is the final barrier before a broader recovery can be declared. A clean break above would validate the rounded bottom and open the door to higher targets. A rejection would keep Doge in a recovery range, waiting for the next catalyst. For now, the market is watching. The pattern is in place. The momentum is building. But until that Dogecoin gives way, the comeback remains incomplete.